Hello everybody, welcome once more to the channel. Today we'll be doing a market forecast on GBPUSD. The last market forecast was 3 weeks ago, so I had to leave time for the market to engineer a lot of pricing. So getting into pricing now at the moment, I will begin this market forecast on the monthly time frame. That is, I will analyze price on the monthly time frame. I scale down to the weekly time frame, the daily time frame, and so on and so forth. So if we start by looking at price on this monthly time frame, we might clearly see price has been bearish. And how do we know price has been bearish? Simply because price created a high here, went down, created another low, retraced to create another high. So this high, this previous high is higher than this one. This new high is lower than this one. So this is what we call lower lows, lower highs. So we have a low, a lower high, a lower low. Price went down, broke structure here. By breaking structure, this previous low was violated and went down to form a lower low. Went up to form a higher high. Went down, broke another structure again to form another lower low. And due to the fact that price has been forming a series of lower highs and lower lows, it's telling us the market is bearish. And moreover, we are seeing liquidity sitting below this level. Since we see major liquidity sitting below this level on the monthly time frame, and we know that this is simply a retracement, like we saw here a retracement and price went down. We saw a retracement and price went down. So we're expecting that because of this retracement, also price should come down and sweep this liquidity here and come to at least this point. Also, one of my concerns is this inefficiency in price action. This candlestick you guys are seeing is what I call price inefficiency. So because of this price inefficiency, I'm expecting price to come down and feel the inefficiency to at least 3/4 of the candle. And if you look previously to your left, there was an inefficiency in price here created within the month of February and April 2020. Price came down and this inefficiency was completed here within September to August, September 2022. So basically, I'm expecting price to come down in the future, sweeping this liquidity which it has created and to fill in this inefficiency. Basically, because of this movement, I'm expecting price to engineer more liquidity so that we should have a lot of accumulation of liquidity before dumping. And remember, so that is my analysis. And based on the monthly time frame analysis, I know that I'm expecting the market to sell on the long run, but on the short run, we'll have to get into the weekly, the daily, and the 4 hour time frame to be able to understand what the market is doing. So I scale now down into the weekly time frame. And scaling down into the weekly time frame, remember on the monthly time frame, this was a chart. This low created this high, this low created this high, this low created this high. Since we already understand what is happening on the monthly time frame, we have a bigger picture of the chart. We don't need to analyze again the bigger picture on the weekly time frame. We have to just take the most recent lower low on the monthly time frame, which created the most recent high on the monthly time frame. So analyze price within this zone. Analyzing price within this zone simply means if I take my tool and I map from year to year, this is our area of focus now because we're looking at price action within this period of. So basically looking at this previous low, that from this previous high that was on the monthly time frame, and on the weekly time frame it gets a little bit confusing because there was a low, there was this internal structure here which was created, understand? And based on this internal structure, what can we see? The best way I'm able to predict the movement of the market is based on my inefficiency concept. Looking at this market, price has reacted within this zone. This is a 1 week mitigated zone. This was a supply zone which was already mitigated, and price came there and gave us another reaction. And based on this reaction, if you look at price technically, based on this reaction, we can clearly see that this is on the weekly time frame. This is a 1 week this is a 1 week supply candle, supply zone. Within this supply zone, we're expecting price to sell downwards because so we're expecting price to react and sell downwards. And due to that, we're looking for a bearish on this on the weekly time. And also, this week has just ended, and within this week ending, it has given us this sort of candle. It has given us let me it has given us this candle. I need to use another tool, guys. Sorry. It has given us this candle. This candle, when you look at this candle, this is what I call an inefficient price action. This is what I call inefficiency in the market. This is what I call imbalance. Many people have their own ways of identifying imbalance, like a gap or whatsoever, but this is my concept. This is an imbalance. And when I see an imbalance like this, it simply tells me that there's a high probability that price might come back to fill this imbalance. There's a high probability that price might sell down to fill this imbalance at least 3/4 of this empty week. So basically that's it. I have a video on my YouTube channel where I explain these concepts of imbalance. So let me just give you an example, guys. Looking at this candle, price created an imbalance here, and I was certain that due to this imbalance, there was a possibility that price will go up in the future. Let me just clean the chart. There's a possibility that since price created this imbalance here, there's a possibility that price will go up in the future to fill out that imbalance. I don't always expect price to come right up. For example, I don't always expect price to come right up here to fill it the week completely. As long as price is already able to fill it from yes, this is already 3/4 of the candle. It is already completed for me. And this is another example here, guys. Looking at this reaction from here, looking at this price action from here, this is another imbalance within the market. Once I see this imbalance, and guys, look critically, this candle which you guys see here is the same like this candle, just that is inverted. Here the market was trying to buy, it ended up being bullish, leaving a lot of wick. The same thing here, it was trying to sell, it ended up being bearish with a lot of wick. So based on this, I'm always telling myself, due to this type of inefficiency or imbalance in price, there's a possibility that price might come back in the future to sell to fill that imbalance. So without complicating things, this is the only idea which I have for this week. I'm expecting price to sell in, and to fill back this imbalance. Obviously, price might not always fill the imbalance now, or this week price might continue to go up because above this area, within this area, we have a lot of liquidity which has been accumulating. So there's a probability for price to go up and sweep all this liquidity before dumping. But what never as well, nevertheless, I'm expecting price to also sell, and I'm expecting price to take out this liquidity. Depending on how the market will move within the week, I'll be able to understand if I'm taking buys or sells. And so that is my analysis on the weekly time frame. And we'll have to scale down now to the daily time frame for you guys to be able to understand more in depth what the market is doing. So basically, this is it. So at the moment, some charts, some trades are showing. So this is exactly what I'm talking about. I want to keep the analysis simple. Okay, I'm trying to do a market forecast on GBPUSD. I'm not using much of market structure, but rather liquidity and imbalances. Most of the times I do my market forecast, I focus more on market structure, but as long as I'm able to identify price inefficiency based on the way I understand my own price inefficiency and on liquidity of or focus on those. Basically, if you guys look at this chart critically here at this time, if we look at it based on smart money concept, we go back to see price has been creating higher highs, higher lows, higher highs, higher lows, higher highs. Price ended up breaking structure down here to form a lower low. Now gave a retracement up, reacted here, So because of this change of structure, you were expecting price to start selling. Simple as that. Simple as that. Based on smart money concept, that's what we're seeing. There was a change of market structure here from bullish to bearish because this previous low year was violated and price went down to form this lower low and went up to form a lower high. This is a high, a lower high. So I expect the price to sell. So that's that's also telling us this because we are on the monthly time frame we are bearish. On the weekly time frame, because of that inefficiency in price, we are bearish. And on the daily time frame, because of smart money concept and the change of market structure, we are bearish. So price started selling, came back up. Understand? Price came back up, and there's a reason why price came back up because there was an accumulation of liquidity here, which you guys will see on the 4 hour time frame. So that's simple for it, guys. So looking at it on the SMC way, we see the market is bearish. But if we're looking at it on the trend and resistance system of trading, if we draw a trend like this, we see that price box structure. This trend line, if we look at this trend line, this is a trend line here. If we draw a trend line like this, price has broken this trend line. Yes, telling us is starting to sell. So basically, that's how you understand the market. So I have to go now into the 4 hour time frame for us to see. So basically, within the 4 hour time frame, price has been had been creating price had created liquidity here. So this movement was to go up and take out this liquidity. And I was expecting price to come within this zone and give us a buy before we target that liquidity. But unfortunately, there was a news, there was a Fed, there was a Powell, there was a Powell federal news on Friday. So price reacted from this zone directly without giving us the opportunity to get into the market. But our bias, our direction was bullish because I was expecting price to take the liquidity to this level. And remember, guys, remember one thing, this supply zone has already been mitigated. 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 All these supply zone which has already been mitigated are no longer valid supply zones. They are called zones of liquidity. Why are they called zones of liquidity? And when I talk of mitigated, it means all these zones are where people are selling and putting their stop losses. For example, this was a trade I took, this was a sell, for example, and my stop loss is within this area. I took profit here and price went back up to sweep all those who were still holding their trades here with their stop losses. That's exactly what I'm talking about. So basically, due to this too much accumulation of liquidity here, I'm expecting price to come in the future and sweep all this liquidity. So this is where we have a dilemma. We have a dilemma why? Because monthly, weekly, daily is bearish, quite alright, and also we saw an inefficiency on the weekly time frame telling us there's possibility of market to sell, but above that level of inefficiency, we also have level of liquidity. So the dilemma is we don't know whether price will go up to sweep the liquidity first before trying to sell to fill out the imbalance, or price will not take out that imbalance but just continue to go, or price will just react from here to start selling. So basically that's the dilemma. So basically this week I'm focusing more on sales than buy based on the fact that the monthly, the weekly, the daily, and even the 4 hour time frame is bearish. When if you look at the 4 hour time frame, if I have to make the chart to be a little bit somehow, if we look at the 4 hour time frame, this low created this higher high, higher low, higher high, higher low, higher high. It was supposed to create another high, but it went down to create a lower low. When gave us a retracement, right? Within this retracement, price was still creating another structure. High, low, high, low, high, low, low, high, low, high, low, high. This is a retracement. It could be a retracement here to sell. So we'll just be watching on the market. But guys, for this analysis, we'll focus more on selling opportunities. And if I have to expatiate my charts, you guys will be able to see that price is already reacting within a zone here. If I have to reorganize my charts, price is reacting. This is already a reaction of price within this four. This is a 4 hour supply zone here. Price has reacted within this supply zone. So there's a potential for price due to this reaction to come and dump. So there's a possibility for a sell, guys. So watch out on GBPUSD. Stay tuned. Sorry, the video has been so long. I was doing the analysis and trying to explain again more concepts. So thanks for watching. Share, subscribe, and share.